Could the Bitcoin price potentially be setting up for a price target of nearly 100,000 at some point after the block reward halving? Let's dive in and analyze. What is going on, ladies and gentlemen? Crypto Kirby here, your cryptocurrency expert, back with another edition of the daily live stream. Today we're going to discuss the Bitcoin price and the action inside the chart right now. My friends, we're going to discuss this current halving that's set to occur in roughly about 2 weeks' time. We're also going to look at the intraday technical analysis here as well. And what I want to do, my friends, is really understand what type of market cycle Bitcoin is in right now. You guys would know if you are subscribed here. I do love to look at the Wall Street cheat sheet psychology of a market cycle from time to time. And what I want to do here is observe this current cycle that we're in, coming from the bottom here at roughly 3.8K. back to where we are at now, and how this compares to what we've seen from the bubble pop at 20,000 all the way back up to 14,000. We have a lot to look at here today. The space all of the sudden has gotten very unrealistic, my friends. With the halving coming up, I'm seeing all sorts of garbage being posted. 100,000, 200,000, the fiat system's gonna collapse, Kirby, and the halving, this is the perfect setup for the moon. My friends, we need to take a step back, take a deep breath, and we need to look at these charts as realistically as possible to potentially crush this market and get this crypto. So as a full-time trader, I'd like to discuss with you my strategy, my game plan, and how I plan to crush this market right now in the immediate term. So without any further ado, you guys already know the deal. If you like these daily crypto videos and nightly live streams, smack that thumbs up button, click the subscribe, tick the little bell, and let's get this crypto. Moon the likes, ladies and gentlemen. Moon them up. All right, so we'll begin with our Bitcoin technical analysis. And of course, before we begin, this is not investment advice, this is not trading advice. These are only my own opinions, ideas, and speculative hypotheses on the market. Always do your own research and your own due diligence before investing or trading, as this market is extremely high risk, and I am not your financial advisor. I will never tell you what to do with your trades or investments. That being said, I want to start the video off by going over to the BLX chart here and understanding what this halving cycle looks like compared to the prior two halvings. Now, if you are subscribed here, you would know that I showed this on the last video. This current halving we're heading into, the market structure is very different. You could see over here back in 2012, Bitcoin was in a very solid uptrend, right, inside this parallel channel here. Very solid uptrend. Then over here in 2016, very solid uptrend in a parallel channel, right? Heading into the blue line there, which is the halving date, okay? This time, my friends, we see that Bitcoin is in a clear downward sloping channel, right? You could either draw it from that bottom wick there down to 3,800, or even if we drag it up here to the more relative bottom touch points, we are clearly inside a downward sloping channel. Just structurally a difference, right? Sure, you can argue that that doesn't mean much. The fundamentals, Kirby. All right, little James, we're going to discuss that as well, because the halving, you can't discredit the fact that it is going to create a difference in the supply and demand factor of Bitcoin. Completely agree, completely understand. And yes, the past two times, albeit it could have been a coincidence, which we'll discuss too, Bitcoin has seen some longer term positive price action, okay? So we see the difference there. Also, briefly, before we go any further, I just want you guys to take a look here as well at the S&P 500 chart, right? So we can get an idea on how the equities markets were performing during those times. We could see here in Bitcoin's halving number one, equities were in a solid uptrend inside an upward sloping parallel channel. Then over here again in 2016, they were in a solid upward sloping channel. And now, my friends, what do you know? Ding, 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 chicken wings for dinner, tofu if you're vegan. Very similar to the Bitcoin chart, that there is a difference in comparison to the prior two halving dates. We could see here that the equities are not in an upward sloping channel. In fact, they broke down out of this, and we're going to have to see what happens, right? Especially if you actually drag this channel up here, let me just get this so we could see this better. If you drag this up here to the more relative channel, you know, you could see that it's dropped pretty far out depending on where you want to draw it. It's all subjective, but even if you do draw it down to that bottom wick down there, I mean, it's still broken down out of the channel. So we have some major structural differences leading into this halving, right? I don't think anybody can argue that. Now, what you can argue is that that's not going to make a difference. Okay? For me, my friends, there are some key things to understand here. One being that this uptrend, let's go into the current chart now. This uptrend that we've been on now since 3,800 was a direct correlation with what happened in the global equities markets. We saw an absolute capitulation starting back roughly towards the middle of March, okay? Bitcoin capitulated along with the equities markets quickly again. We'll go back over there. I mean, it's a complete, essentially we're looking at a very, very similar graphic here, right? And now we are reaching points that are quite concerning for me, albeit this region that Bitcoin ripped through was also concerning for me. But now we have to look at something different here. Here on the regular scale, we could see if we flip on our Fibonacci retracements here, we'll go first from 20K all the way to the bottom there at roughly 3,000, okay? What we're looking at here is the market cycle, okay? And what these Fibonacci's represent here is the extension target, right? And if you're not understanding, it would be if we flipped this chart upside down, essentially what you're looking at, is retracement targets. But when you flip it, you're looking for extension targets of potential upside action. And we could see here from the bottom at 3,000, we wound up finding our last market cycle top up at the golden 0.618 Fibonacci extension. So now, my friends, if we just want to be realistic here, right, what we want to do now is take the Fibonacci extension from this top at roughly 13,800 or so, all the way down to our low. And we need to now understand where is the Fibonacci currently located. My friends, if it were to follow the same type of trajectory here, get up to the 0.618 golden and fail, my friends, that golden fib here is at roughly 10,000 USD. Also in confluence with the old range of multi-month support of the descending triangle, which then back-tested as new resistance not once, but twice for our heinous double top rejection, which then led to our capitulation down into the crypto abyss. Let's get this crypto. So when we talk about things like the market cycle, right, a Wall Street cheat sheet psychology of a market cycle, generally, for me, you could see that the euphoria phase generally can lead up to the 0.618 golden extension and then find a failure, okay? Doesn't have to occur like that, but that's what we've seen historically. And I think that it's very unique here that the 0.618 golden directly coincides with the range that, at least for the time being on this last cycle, acted as the bearish unbreakable ceiling here. If this remains as the bearish unbreakable ceiling and Bitcoin gets rejected at this region to form another top here, forming what could be a rare bearish triple top rejection, my friends, that is not what we would want to see here. And I'm not ruling it out of the equation simply because of the fact that right now the halving is coming up in less than 2 weeks' time estimated, okay? And what we could see is that it's going to change the mining industry forever, okay? The more difficult it gets to mine, or rather, difficult's not the right word, the difficulty adjusts, the more, what's the way to put this? The less profitable that mining becomes due to the block reward being cut in half. It makes the pool of miners smaller and smaller in the sense that only the biggest and most profitable companies can remain, right? It really flushes the mom and pop mining ecosystem down the drain. And by mom and pop, I don't mean it has to be some small scale mine. This can actually be a pretty large business, but it's only going to be the ones that are worth a ton of capital, my friends, that are able to sustain the less the block reward goes down. And we will have to see things like the fees speculatively, the fees will probably have to increase over time as well. It changes the game. And I wouldn't rule it out of the cards here that once that block halving comes in, at least short term, we could see some profit taking here at these higher price points before some type of rejection. Now, that's basically just looking at it from a market cycle perspective, okay, of where, hey, take the halving out of it, right? This would be the range up to the 0.618 that possibly this is our next parabolic blow off top zone, right? Which is right around 10,000 USD. It also coincides with all of that up there. Let's get this crypto. I hope that if you're a moon boy and that you've clicked onto this stream because you saw a thumbnail that said 100,000, welcome to the realistic aspect of cryptocurrency. Don Carbonaccio is never going to sit here and fluff you up with false realities. The thing is, my friends, is that this space gets very unrealistic when we get some sort of catalyst that's coming up, right? You name it. Just remember it, right? Backed was one. When Backed launches, we're going to the moon, Kirby. Really? Did we go anywhere? No. Right? The ETF, Kirby. Going to the moon, Kirby. Oh, really? Yeah, great. There, you could name everything and anything, my friends. And the space, it even makes it... I just dislike making content during times where the market gets so irrationally unrealistic. That's not my forte. I like to look at it for what it is. So we're going to talk about what could potentially happen here next, but I'm telling you right now, there's nothing in the chart that suggests any number even remotely close towards 100,000 or even 50,000 or anything. So anybody making predictions like that, you have to understand that is a prediction on their end, a guess. There is nothing in the chart that can show you that that's potentially to occur. Oh, Kirby, I saw some extrapolation model with these scientific numbers and my friend, if you want to, puff away on that hopium, you do it. No one's stopping you. The thing is here is I don't have data on my chart to suggest such a claim. So moving forward, we will discuss what could potentially happen here to the upside, but we're also going to discuss what could potentially happen there to the downside. Okay, let's get this crypto. And if you do appreciate this thus far, ladies and gentlemen, the realistic analysis here, no moonboy hopium. I mean, you know that oh, Kirby, you got me with the clickbait. You got clickbaited, little James. Welcome to the house that Don Carbonaccio built. The thing is here is that during these times, you think a video that's showing realistic analysis is going to get the same clicks as, oh my gosh, Bitcoin could go to 1 million. Get out of here, man. And that's what makes it, so... I don't know. It's distasteful to me during these periods in time. So I really would appreciate a thumbs up here, ladies and gentlemen. Let's flush these moon boys out. Flush them out. Hit that thumbs up button if you're brand new to the channel. Don't forget to hit that subscribe button, tick the little bell, and select all. I do analyses like this nearly on a daily basis. So welcome to the channel. Welcome to the house that Don Carbonaccio built. And now let's move forward with the analysis here. Okay, so we've looked at the market cycles. I've shown you that we are potentially coming up to that 0.618 region there of this cycle in particular, and it would be normal for a cycle to end at that point. Doesn't have to, but it could. And now when we need to start looking at what's going on here on the micro time frames, right? We'll look at the daily, the 4 hours, things of that nature. Okay. So just as I pointed out earlier, Bitcoin is now in a zone of concern for me. We did break out of this bull flag pennant formation, albeit there was a ton of bearish resistance right around the top of this range, ladies and gentlemen. It was absolutely overwhelming. The amount of bearish confluence, right? We had the 0.618 micro extension target right there, blasted right through. We did have bearish divergence on the 4-hour time frame, my friends, on the RSI and the MACD histogram, right? Bearish divergence there, bearish divergence there. We had it. It didn't wind up playing out. It wound up negating that. We also had a upward sloping line of resistance here, right? That if we took our line like this and drew it, I actually have this pulled up on another chart, I believe, so we could see the pattern that did not play out. We had a potential bearish rising wedge here, right? That wound up breaking to the upside, breaking this line of resistance. All of the bearishness was negated. That's why it's important to understand that in trading, no matter what the technicals show, no trade setup is ever a guaranteed thing, right? I actually wound up taking a little short in here, albeit my position size, which was much smaller than normal, due to the fact that with the amount of external factors playing into this right now, i.e. the halving, the equities markets, the global health uncertainty, right? My position sizes right now for my trades are much smaller than normal, right? Because of the extra risk associated. So there was just a ton of bearish confluence, and Bitcoin did wind up breaking through them bullishly, which inherently can switch the trend from bearish to bullish on a micro level, right? But right now, when we look at the daily time frame here, let's look at the RSI. Currently, we are in overbought conditions here. Could signal some potential, a potential probability increase for a drawback in the price, right? Also here, my friends, look at the MACD histogram forming a bearish divergence, right? And if you're not understanding what I'm showing you by that, the bearish divergence is the ascending higher highs in the price, right? High, higher high, higher high again, 1, 2, 3. And here on the MACD histogram, high, lower high again, okay? So we are in overbought condition on the RSI. We are seeing a bearish divergence on the MACD histogram. Will this play out? I certainly believe that going up into this level of tentative price action resistance as well here, just off price action confluence, mixed into the pot with all of that, there is an increased probability for some sort of pullback after an absolutely explosive move. Doesn't need to occur, but I think that it is lining up for the FOMOers to potentially get wrecked here. Just like this bearish confluence zone didn't have to play out, this one doesn't have to either, okay? It's just, is there a probability? In my opinion, yes, based off of the confluences inside the chart. Let's get this crypto. So this range in particular, definitely an area for some potential resistance, right? And if that does in fact occur, ladies and gentlemen, maybe we get another push up. I find it hard to believe right now that if the bulls and or the entities that are essentially driving this market right now, I do find it somewhat hard to believe that if they've taken it this far, essentially inducing FOMOers back into this market, I think that this area here is a very troubling range, but what's to say that they can't push it up higher before maybe the halving date comes in and they look to take some profit, create some liquidity for themselves. Let's get this crypto, okay? So I think I've really outlined the potential dangers of this area here from a technical analysis perspective, right? Of course, it could all be negated. It's just technical analysis, right? This does not predict the future. This is using past historic trading data to see what's happened in the past and conjure up a hypothesis of how traders could potentially act again in the future. Okay, there are no certainties or guarantees in trading. That's what, the thing is here, my friends, is that it's very similar to games of chance like poker, right? Where, say that you have a great hand, right? And this guy goes all in and you call and you flip your cards over, and the only card that could beat you on the river with one card to go would be an ace. I mean, you would, if you could see his cards, you would say, yes, I call every single time, because there's such a large chance for you to win, yet such a small chance for you to lose, right? But a small percentage of the time, boom, his ace hits on the river. And in crypto, what happens is that even if all of the technical analysis looks bearish, which, I mean, even like this, that we've been on a downward sloping trajectory for so long now, years, the thing is that even if there is an overwhelming amount of bearish confluence and then the trend breaks up, the moon boys and degenerates, they're results oriented. So say something like this here was like, calling that player's all in, and he only had 3 cards that could win the hand for him, right? You would make the call all day long, but a portion of the time you lose, right? the moon boys and degenerates in this space, they wouldn't see that as, oh, well, Kirby, you know, nice call, you'll get him next time, right? If that player's ace hits the river and it negates all of the technical analysis, right? That's the comparison, and just goes up. They see that the price went up. So all of a sudden, they throw all of the technical analysis out of the window and say, get wrecked, Kirby. You see, Bitcoin's going to the moon. Those are losing degenerate players. Do you understand? Those people have no chance of long-term success at all. At all. So it's important to not be results-oriented when you're looking at these charts. It's important to be your system, the way that you're monitoring these indicators, et cetera, right? Looking for as much confluence in the chart for a potential edge over the rest of the traders in the market, right? Let's get this crypto. Just a little lesson I wanted to point out there. I've seen many of you have been frustrated that these zones were not acting as rejection points and things of that nature. Well, the market can remain much more volatile and, essentially going against your technical analysis longer than you can probably stay solvent, right? So the thing is that you have to understand trading is a long-term game. You're going to win and you're going to lose. The thing is that all you can control is how you monitor the charts. You can't control the price action, okay? So don't drive yourself crazy with things you can't control, right? And that being said, we're going to now get into some more potential bullish stuff here. But ladies and gentlemen, if you do want to see all of my trade setup ideas in absolute real time, I post all of my trade setup ideas, my entries, my exits, my targets, my positions, my take profit zones, etc., all exclusively for you in VIP. If you are not already in my VIP, well, I would highly suggest that if you are considering joining, that today is the day for that. If you want to see all of my entries, exits, targets, positions, etc. Well, I'll see you in VIP right now after this video. Today is the day. It's time to transform yourself from average Joe into savage Joe. Let's get this crypto. I'll see you in VIP right now after this video, okay? But, so now that we've discussed basically all the potential bearishness here, right? What we do have to understand is that what happens if we break market structure? Let's go over to the BLX now, okay? And again, my friends, I mean, obviously, if you're tuned in still, I mean, I know you're appreciating this, so please don't forget to leave a thumbs up on this video. It really helps the channel, really helps the algorithm, so if you could leave that thumbs up. And like I said earlier, if you're brand new, hit that subscribe button, tick the little bell, select all, and let's get this crypto, okay? Welcome to the house that Don Carbonaccio built, okay? So now, let's go back in here, okay? And what we need to understand is that right now, the Bitcoin price here on the monthly time frame, it closed yesterday. The monthly candle closed, right? And where did it close, my friends? Ding, ding, ding. Chicken wings for dinner. Tofu if you're vegan. Right on that downward sloping resistance line of which Bitcoin has respected since our blow off top at 14,000. Okay, so this is exactly where you would expect the price to get stopped out at on the monthly time frame if we are going to potentially continue bearish. Okay, but how can we start to negate this? How could this potentially start to turn around? Well, my friends, what we want to see is next month's candle get above this region here. We want to see that the halving comes in, we get a candle close here, and then hopefully a candle close fully above that zone, because that is when you can start to look, or rather when I can start to look at this market from a more bullish perspective, right? That we're getting candle body closes above that channel. And then most importantly for me, ladies and gentlemen, let's go back to the weekly in here now to get a better view. For me, I really can only start looking at this market with a bullish bias after we get above this region here, right? And that is getting back above our prior double top rejection zone, which also coincided with multi-month old support, which then flipped into new resistance and proved to confirm itself twice, okay? Once Bitcoin can get above here and start forming weekly candle body closes above this region of about 10,500, that is when the market looks to me like it's broken bearish structure, and that I can start to speculate further up, looking at at my plays from a more bullish bias than a bearish one. I just don't see that yet. Sure, the halving could be the catalyst to change that. It's just that right now, I think that this still has a high probability to potentially be a bull trap. And again, the Moon Boys, ladies and gentlemen, they go crazy at these times. And that's, again, why I very much dislike when this unrealistic euphoria enters the space around these little catalysts, okay? It's almost like they're a little gang, right? A little posse. They come in, hair all slicked back, greased up in their leather jacket with maybe a little toothpick in their mouth. Oh, Kirby, I want a Bitcoin and a milkshake. Kirby, a Bitcoin and a milkshake. Hey, yo. Come on, my friend. The thing is that you guys, they make like these types of things just are going to rip the price to the moon. It's never going back down again. What have we seen over the past 3 years, really? 2.5 years, roughly. What have we seen that's made this market so bullish that you're never going to see these things again? My friends, this is not 2016, 2015. This is not, right? Look at this. This action is not similar to this. This action is not similar to this, okay? These are bull markets, okay? This is a bear market that we've been in for 2.5 years, Stu Nod, okay? That doesn't mean that it can't become a bull market again. You have to take time, length, duration into your point of view. That's why I'm stating this still looks like a bearish structure. But if we are able to break above here and start to change it, my friends, it could turn into what I believe to be a bullish structure. And then all of that changes. And then, yes, maybe it could begin to look like these bull markets. But right now, I just don't see it. Okay? I hope that the halving can be that catalyst to get us above this region. But I'm not joining the little Moon Boy biker gang with the leather jacket, the greased up hair, and the toothpick in my mouth. Bitcoin and a milkshake, Kirby. Hey, oh. Not today, little James. Not until I see that we get above that region and I could start to speculate that the price could be on a longer term bullish trajectory. For now, all I see, based on the technicals, is we are still in a bearish potential trajectory. Sure, this could be changing with things like the RSI has bottomed out on the weekly. We could also be seeing a weekly potential bullish MACD histogram, right there, potential bullish divergence, right? Lower descending lows, higher ascending lows on the MACD histogram, right? It's possible, very possible. But right now, my friends, until certain parameters are met, like maybe we back test this. Let's turn on our moving averages here. Okay, let me get this 21 pulled up for us. Right here we could see this 21 week is one of my favorite moving averages to look at. You guys can see all throughout these very bullish periods, right? Bitcoin has traded above that 21 week moving average, right? And in these very bearish periods, Bitcoin loves to trade below the 21-week moving average, right? And we've seen it here for the majority of this year in particular. Bitcoin now has finally broken above the 21-week moving average. If we can begin to close there, begin to close above 10,500, things of that nature, break the downward sloping channel, right? That's when the macro view for the dawn becomes very, very optimistic. Right now, I think that this halving does have the potential for large entities, particularly in the mining field, to potentially have an influence on this market, to put it lightly, that they may be playing some games here, that there may be very, very increased amounts of volatility surrounding the halving date in particular when the block reward does in fact get cut in half, right? Keep in mind that right now, Bitcoin is still mining at essentially 2 times the block reward that we're going to see in less than 2 weeks' time. You cannot forget that. You are still getting essentially double the reward that you're going to get in about 2 weeks' time from now, okay? So things haven't really changed yet. All of that will change after that block height is reached and the halving takes place, Okay, so I think there's room for some, shenanigans here, and I think that this still could potentially be a bull trap. I mean, it just is what it is, ladies and gentlemen. I've showed you basically all I can show you here, and I really hope that you appreciate it. Of course, the Moon Boys, whatever, they want to chirp, they want to Don you me all you want, James. There are plenty of channels for your Moon Boy hopium fantasy dreams. I mean, if that's what you want, I get it. It's solid entertainment, right? And if that's what you want because you have a very, very small amount of capital invested, and you just want to believe that your $1,000 will somehow magically turn into 10 million because of some digital internet coin that you purchased. I mean, I can't do anything for those people. So this channel is for traders. This channel is for realistic, analysis. And my friends, I'm looking to trade all of this to the best of my ability to potentially crush it and get this crypto, right? I'm not looking. You have to keep in mind too, investing and trading is two very, very separate things, right? I'm looking for trading opportunity. The swings up and down, up and down. It's not like I'm looking to, see, there's the bottom. I'm all in and I'm hodling forever. That's not what I do, my friends. I swing trade up and down, up and down. If it's going down, I look to short or potentially dollar cost into a long. If it's going up, I potentially look to trade it long or dollar cost into a short, right? If you want to see how I'm looking to trade all of this action, because you see right now, I'm watching this all like a hawk with an eagle eye, and I'm preparing to strike like a cobra out of the grass and get this crypto. If you want to see exactly how I'll be setting up all of my trades for this exact action here over the next several weeks, my friends, I already told you earlier, but I'm going to tell you again, because if you are planning to become VIP, you should become VIP right now, today. It's time to transform yourself from average Joe into savage Joe. Let's get this crypto. If you want to see exactly how I'm setting up my trades, how I'm setting up my strategies, my entries, my exits, where I'm looking for potential take profit zones, etc. That is what you get from me around the clock, 24/7 in VIP. I can only be here on YouTube once per day, but in VIP, it's around the clock, 24/7. As I see what I see, I post. As I set up my trade ideas, I post. My friends, today is the day. It's time to transform yourself from average Joe into savage Joe. Let's get this crypto. I will see you in VIP right now after this video. My friends, so in conclusion, I don't know. I mean, the thumbnail, again, is because we have so many leather jacket, greased up, slicked back hair moon boys with the toothpick in their mouth right now. 100,000 Kirby, 500,000 Kirby. They want to discredit everything that's realistic. Talk about Moonboy Garbaggio. I do not see anything in the chart that can even tell me that we have to go above 20K. That can change when the structure changes. For right now, I don't see anything besides the potential continuation of a bearish trend from a macro perspective. That doesn't mean that I'm just shorting randomly. Doesn't mean that this is it, guys, we're going to zero. It just means that what I'm looking at in this chart from a structural standpoint is still more bearish than bullish until proven otherwise. If you can't understand that, well, my friend, you probably will never understand technical analysis at all. Let's get this crypto. So my friends, that being said, I'm looking for aggressive trading opportunity right now. Do not get caught like a deer in the headlights here. Do not take that trip to Rec City with Average Joe and James at the water cooler. You're better than that. You deserve better than that. I know personally I'm looking to potentially crush it like a 2-ton man on a tuna fish can. If you want to see how I'm setting up my trades, like I've already stated, then I will see you in VIP right now after this video. Today is the day. It's time to transform yourself from Average Joe into Savage Joe. Let's get this crypto. I will see you in VIP right now after this video. Let's get this crypto. If you can, ladies and gentlemen, don't forget to leave that thumbs up. It really helps the algorithm. Thank you again. If you're brand new, hit that subscribe button right now. Tick the bell and select all. That will give you all of my notifications when I upload. Welcome to the channel. Welcome to the house that Don Carbonaccio built. Hit that subscribe button, tick the little bell, select all. Let's get this crypto. And until next time, my friends, the Don has spoken. Be safe, be happy, be healthy. It's your boy, Crypto Kirby. Peace and love, my friends. Curves.